Good morning. I hope you're doing well, and welcome to today's edition of the London Session Open, or 600 seconds as we call it here at tradecaptain.com. We're going to take a look at the markets as we usually do at this time of the day, and today is July 26, 2018, and it's about 9:11 a.m. in the morning. And in essence, over the next 10 minutes, I'm going to provide you guys with a quick update on the markets. So what's like the headlines for today? This one, US President Trump and EU negotiator Jean-Claude Juncker find common ground on trade in Washington. So Donald Trump, President of the United States, and Jean-Claude Juncker, they met yesterday, and I read the statement. They don't necessarily specify exactly what's going to happen, but they're pushing towards less trade barriers and less friction to trade, which is something that Donald Trump hinted already on at the latest, I think it was a G20 meeting. As you might remember, he doesn't want trade barriers. Ideally, there's no trade barriers or no sort of subsidized sanctions to any industries, and you let everybody just do business. And that's really what he's looking for. But obviously, he's pushing extremely towards one side to force people to reduce their barriers. So this, caused the dollar to weaken a little bit, and has in particular caused stock markets to gain. Here's the S&P 500. As you know, I bought already here at 27.90. We talked about it when the market was down here, actually. More or less, I said that if we take out this high, we could probably head to the upside, and we're heading towards the right direction. And I do think we could potentially hit the 2018 high. And if you look at the S&P 500, it's in a short-term uptrend, and you have this low here that should act like a short-term stop level for scalpers, and you might go down a little bit, but I think eventually we're going to head to the upside. It's not always easy to find entry levels after the first initial move, which was down here. But this is one if one is interested. Now, some people, they're just going to put stop loss orders below 28.09, all right? But I would rather work with 28.02, which means that the market can spike down and even push below it. But as long as we sort of close above this high, I wouldn't worry too much. Now, let's take a look at the euro. So today is the ECB rate meeting. We might have some action. As I mentioned, I think already 2 days ago, inflation is at 2% in the euro area or eurozone, and that's the target of the ECB. But that's as well what they project. And what they're worried about is that the gain in inflation so far just has to do with energy prices primarily, and that underlying inflation generated by the economy in the eurozone is still quite low. In fact, core inflation, the last reading was at 0.9, so it's not really a good. It's not a lot of inflation originating from the eurozone itself. Now, something that's important to understand is that the Federal Reserve, they care about core inflation. The ECB traditionally doesn't care too much about that. They care about headline inflation. Now, the reason why the US and the Fed doesn't care so much about headline inflation is because they know that it's short-term in nature. Whereas in the euro area, they're happy to sort of adjust their interest rate based on the short-term short-term fluctuations to some extent. So they could easily just argue like, no, we need to raise interest rates now. But I think they have started to become slightly more clever, and they are focusing on underlying inflation pressures more. And I think that's one reason why, I'm not very optimistic on the euro. But we'll see what happens, and break the July high, and we can probably go to 1996. Break the June low 115.07, and we can probably head to 113. And this is really the easy part of the trade, if we trade to the downside, because there's not too much solid support until we start to maybe hit 106. Okay. Next market is going to be Bitcoin. And Bitcoin on the 4 hour maintains a bullish bias. If you didn't buy on the breakout we talked about down here at 68, 67, then it's a little bit too late. I do think, however, though, let's stick with the trend for as long as possible. And if we take fib from the low to the high, and this is a 4-hour chart, and this is your first fib, and this is 50% correction, I would guess that if we go down, I think we can go a little bit lower, maybe down to 79.35, and that could potentially be where people are going to look to buy. Also, what's interesting is that you really want to see, I would like to see Ethereum and Ripple and all these other coins as well start to trade to the upside. And there could be better opportunities from a risk-reward ratio perspective to get involved in one of those other coins that has not started to trend higher. Because you're going to be closer to the lows, which means that you can have a tighter stop loss and then hopefully further away from the profit targets. Gold, look at this, moved all the way up, then down, and then up. So we're in a corrective phase here, and as long as trade below 1236, there's no real reason for us to change the bias. Okay, you have two highs here and we're still capped by that level, so I am gonna maintain that bearish bias, but I'm not as bearish as I was in the past. In the past I actually traded things like copper. Let's see if I can show you. So this is copper, and I traded the breakout here. So I was bearish here. I also traded not palladium actually. I traded platinum. So this is platinum, and you can see here how we had that bearish break here. So I sold here, and what's interesting here now is that you can see how this market starts to stabilize a bit. Down, up, and then I was also short silver up until earlier this week. I was selling up here, and then I got stopped out. I think it was already on the 24th. So we're starting to see, not here necessarily, but in platinum and in copper, I'm starting to see some sort of bottoming out process. Not necessarily bottoming out because we should be buying and hold, but you definitely see in profit taking. So I think that hints a little bit to what may happen with gold. I'm not gonna be buying down here, as I said, but at least some stabilization. And yeah, sometimes it's just gonna go like this, but I don't think that's gonna happen. For the market to do like a V-shaped sort of bounce, I think what you need is that you need dramatic change from the Fed or from the US economy, like from payroll. So the Fed today need to sort of deviate strongly from what's happened in the past. In other words, the economic data needs to deteriorate really quickly, or we need to see the Fed changing their bias. This is the price of West Texas crude oil, and it's trading sideways between 67.03 and 70.24. There's not much happening here, but if we move above here, I think it's time to sort of get ready for a push to the upside. And here's the German DAX, and it's moving slightly up to the upside, so that's something to keep an eye on. But I think you will be wasting your time trading this. I mean, I think it's gonna go up, but I showed you how the S&P, could be a good trade. I think there's more in stock markets as well. Look at the Dow Jones 30. It just had a bullish breakout yesterday. Could be really interesting. Could potentially head to the upside. and it all makes perfect sense. The economy in general is doing good in the US, and in Europe, it's improving. Think about it, they're raising interest rates, so it's improving, or they want to raise interest rates, so it's improving. So the world economy is improving. I know that the bull market, started in 2009 in the S&P 500, and it's one of those bull markets that just continue. But why? Well, because the central bank are adding QE and things like that to boost the economy and to help the economy start to grow again. And that was something that didn't happen before 2008, 2009. So even though it's one of these longest one, it's very difficult to compare this with what happened in the past, because in the past they never did things like that. They did some fiscal stimulus, and that is again what's happening here. Well, since Donald Trump got elected here in 2016, he did what? Embarked on a huge fiscal program, and that's what they used to do before QE. During the 70s, and the stock market, the S&P is up with about 30% since then. So we need to understand that simple cycles, simple technical analysis, looking at the moon and things like that, they don't help you to determine when to get in or out. What drives the value of stock markets is money. And if people are making more money, or corporations are making more money, then they tend to go up. And when people think that, well, hang on, they're not gonna make more money, then that's when it starts to get into trouble. As an example, we have the inverted yield curve, something that we discussed in this update already on May 21st, and we talked about it here. The inverted yield curve does tend to indicate that we're gonna have some sort of a recession about 1.5 years later or so. That's the minimum. So all this talk about the inverted yield curve, it will affect at one point, and higher interest rates will affect the economy at one point, without a doubt. But we're not there just yet, and that is exactly what the markets are telling you. So the best strategy, the one I am doing, is I'm just trying to go with the flow for as long as possible. Eventually it's going to peak, and when it peaks, I want to try to turn bearish. But working with, I don't know, I mean, there's people that make money on LA waves as well, I guess, but I haven't really met anybody yet that is really well off on the back of LA waves, and I haven't really met anybody that I know one guy that has made some decent money on selling highs and things like that, but they're not always like, oh, let's sell the high, let's sell the high, let's sell the high. These are guys that, in stocks that is, they sell the highs and they buy the lows. So they have a very good understanding of how stock markets work with these extremes. Myself, I'm terrible at finding these highs, so I don't go for them. I just go for the dips and the breakouts until proven otherwise. Okay, I think we're going to wrap things up unless we have any questions. So we don't have any questions. So guys, I want to thank you so much for joining me. I know it's a holiday period. I'm going to take time off as well. Not this week or the week after, but I'm going to take some time off. In fact, I might go to Dubai for business first week of August, second week of August. And then after that, I will take 2 weeks off, definitely. From I think the 16th of August until the 22nd, if not the whole 2 weeks there. I haven't really decided yet, but a minimum of 7 days, I think it is. So that's it. Guys, keep track of me on AlexFX00. It is possible to send me direct messages as well. If you go to any other person, like here, Trade Captain, you can usually click here and you can send a direct message. You can do that to me. And as well, you can send me an email at asambrano@tradecaptain.com. And I am even on WhatsApp. So here's the WhatsApp number as well, if you have any questions or anything. Guys, have a great day, and I'll see you guys tomorrow at 9 a.m. Thank you.